everyone, welcome back to India Business Insights. Today, prepare for an insightful journey into the world of technological prowess as we shine a spotlight on Hcl Technologies. We will look at how a company which started with a modest of investment of under Rs 2 lakhs by a few friends in the late 1970s has become one of the largest companies in India. But before we dive deep, do ensure to click that subscribe button and activate the notification bell so you don't miss out on our upcoming content. Industry overview. The information technology industry in India comprises information technology services and business process outsourcing. India has emerged as a global IT hub in the last 2 decades. The IT industry has played a significant role in the growth of the Indian economy, contributing to nearly 8% of the country's GDP. The Indian IT staffing industry has been growing at a rapid pace, and with the rise of new technologies, the future of this industry seems to be going on the right track. While Hcl started as Minicom and was, along with Wipro and a few others, a pioneer of the India hardware sector. However, today, most of its revenue comes from software. Hcl's growth has mirrored the growth of the India IT sector. Hcl, like the entire India industry, has evolved rapidly from IT hardware to staffing solutions to high-end IT consulting and is now on the forefront of cutting-edge technologies, and like many other Indian IT majors, it is expected to benefit from the AI revolution, which has truly started in the last year or two and is going to be a major driver of the IT industry. Introduction to Hcl Tech. Let's initiate our exploration with a focus on understanding Hcl Technologies. Hcl Technologies Limited is an Indian multinational information technology services and consulting company headquartered in Noida. It is India's third largest IT services firm with a revenue of 13.7 billion in 2024. Hcl also seems to be coming out of the recent slowdown in the IT sector much better than its peer group. The company engages in computer programming, consultancy and related activities. It operates through the following segments: software services, information technology services and business process outsourcing services. The software services segment provides application development and maintenance, enterprise application, next generation software as a service application services, engineering and research and development. The IT services segment provides management services involving customers' information technology assets. The business process outsourcing services segment offers traditional contact center and help desk services, and the next generation services around platform business process as a service. The company was founded by Shiv Nadar on November 12, 1991. Hcl now has a global presence in 60 countries with over 225,000 employees from 161 nationalities, providing a strong foundation for growth. They also have a near-shore presence in 20 countries, where nearly 4 out of 5 employees are locals. Hcl Tech's TCV new deal wins in the September quarter FY25 stands at US $3,936 million. The IT major own 16 large deals with 10 in the service segment and 6 in software segment. The company started to create wholly owned subsidiaries to cater specific geographic regions from the year 1999. They had the widest service portfolio among Indian IT service providers, with each of its services having attained critical mass. History of the company. While Hcl started as an IT hardware company, its focus well into early 1990s was on hardware and was the largest seller of PCs. It entered into a JV with HP to make mainframes cheaper and more accessible. It, however, pulled out of this JV in 1997. The difference between Hcl and other IT companies, including Wipro, which was also an IT hardware company in its early years, was the very strong distribution network in India. In fact, Hcl continued to be the distribution partner for HP even after the JV was called off. In 1995, it signed up with Nokia to distribute their mobile products in 1995. So, while Infosys and TCS were solely in IT software services, Hcl was seen largely as an IT hardware company. Of course, even during the 1990s, Hcl worked on several marquee projects, including the digitization of the NSE, work with several airlines, and the computerization of the Indian banking industry. It set up its global delivery center in 2001. Hcl also had a JV with Parrot System, which was also called off in 2003. The Hcl of today is quite different from the hardware supplier and the system integrator of the 1990s. For this, let us see how it has evolved since the turn of the millennium. In the year of 2000, the company set up a dedicated offshore development center in Chennai for Hcl Technologies Corporation, a supplier of process control and yield management solutions for the semiconductor and related microelectronics industry. Hcl Cognate, the wholly owned subsidiary company in association with its new partner Globset Inc., introduced Net Security Management Solutions. The company launched the Nokia Professional Center in New Delhi. In the year 2001, the company entered into a strategic alliance with Nasdaq listed Vitis Semiconductor to develop software solutions for global networking markets. They also entered into a strategic alliance with Toshiba Information Systems Japan Corporation to set up a dedicated offshore software development center for developing embedded software for the Japanese company. Hcl Cognate Systems and Services Limited, a fully owned subsidiary company, went into the business of web enabling applications through the launch of demand chain management solutions. In the year 2003, BT Group, UK's telecom service provider, gave a contract worth of $160 million for BPO service operations. The company set up an exclusive center in Noida for executing the orders given by BT Group. The software business of Hcl Infosystems Limited was transferred to the company. The company set up Insurance Solution Center in Chennai. In the year 2005, SEBI made up a tie-up with the company for market surveillance, and the company formed joint venture with NEC Japan. The company amalgamated their 6 wholly owned subsidiaries, namely DSL Software Limited, Hcl Technologies Limited, Hcl Technologies BPO Services Limited, Hcl Technologies Limited Mumbai, Hcl Technologies Limited, and Hcl Enterprise Solutions Limited India with the company. In the year 2006, the company launched ROHS compliance management system for medical device users and entered $70 million outsourcing deal with Teradyne of US. Hcl developed trusted ICT infrastructure platforms for BPO ITE segment and has linked pact with Canada-based electronics manufacturing service company Celestica Inc. to jointly design and manufacture electronic products for global original equipment manufacturers OEMs. In the year 2007, Hcl Venture Capital Limited, a company incorporated in Bermuda and downstream subsidiary of the company, was merged with Hcl Bermuda Limited. Also, Hcl Technologies MAS Inc., a company incorporated in United States of America and a downstream subsidiary of the company, was merged with Hcl America Inc. During the year 2007 to 2008, the company incorporated their wholly owned subsidiary viz. Hcl Technologies Shanghai Limited. Through this entity, the company established its first sales and delivery center in Shanghai with an initial investment of Rs 2.77 crore. In 2011, the company signed a strategic 5-year application support transformation deal with Deutsche Bank's capital markets arm. The service factory delivery model implemented by Hcl is expected to enhance productivity driven by transparent service level agreements and performance metrics. On 17 November 2015, Hcl Technologies announced that it had won an application development and maintenance contract from Deutsche Bank. Under the terms of agreement, Hcl will provide digital solution systems integration, product implementation, and design, build, and test new applications in addition to the ongoing application maintenance and support services. On 25th January 2016, Hcl Technologies announced that it had won an IT infrastructure services contract from Alstom, a world leader in the supply of the most complete range of systems, equipment, and services in the railway sector. On 16 February 2016, Hcl Technologies announced that it had won a significant IT outsourcing contract from the Volvo Group, one of the world's leading manufacturers of commercial vehicles. Simultaneously, Hcl Tech announced the acquisition of Volvo's external IT business, adding 40 new customers from the Nordics and France to its portfolio, further enhancing its market-leading positions in these regions. On 20th June 2017, Hcl Technologies announced the launch of its next-generation research platform, NGRP, a pre-competitive drug discovery ecosystem built with open standards. This platform will provide research scientists with a collaborative ecosystem, greater computational resource, and the ability to mine research data to make more informed scientific decisions while improving productivity by automating and eliminating manual administrative tasks. In February 2021, Hcl signed a 5-year digital workplace services agreement with Airbus. Hcl will establish a modernized digital workplace to enhance the user experience and service quality for the majority of Airbus employees globally. As on March 31, 2023, the company had 122 subsidiaries and 6 associate companies. Business segments. Hcl Tech is structured as 3 business segments: IT and Business Services (ITBS), Engineering and R&D Services (ERS), and Products and Platforms (HCL Software). Number 1. ITBS. It is the most significant contributor to HCL Tech's overall revenue mix. In FY23, the segment posted a revenue growth of 15.6% YOY in constant currency and an EBIT margin of 16.6%, driven by solid growth across all service lines. ITBS comprises of digital business services. This consists of consulting, application modernization services, data and analytics, digital foundation services. This consists of digital workplace services, next-gen network services, hybrid and multi-cloud services, cybersecurity and GRC, unified service management and intelligent operation services, digital process operations. DPO helps clients adapt to the digital age by combining our domain expertise, engineering capabilities and software stack. Also, the segment is expanding automation, AI and machine learning capabilities. EdTech Business Services. EdTech Business Services is a new addition to the ITBS segment, focusing on providing enterprise solutions for talent acquisition and mobility. Number 2. Engineering and R&D Services (ERS). HCL Tech's Engineering and R&D Services (ERS) segment delivered a strong performance in FY23 with revenue growth of 16.8% YOY in constant currency and an EBIT margin of 20.2%. HCL Tech ERS portfolio. Margin of 20.2%. HCL Tech ERS portfolio includes product engineering services, helps to build scalable, complex and new products and systems spanning the whole gamut of product lifecycle management. Digital engineering services help clients reimagine their businesses for the digital era, covering all areas of digital transformation including cloud and data engineering, digital platforms, e-commerce, 5G services, AI and silicon platform services, spec-to-part services and more. Operational technologies helps in ensuring manufacturing resilience and enabling efficient responses to supply chain issues and changing market demands by modernizing infrastructure and processes. Number 3. HCL Software. HCL Software is a provider of innovative technology and domain-specific solutions within niche segments that help drive customer efficiency and innovation. HCL Software in FY23 posted a revenue growth of 1.8% in constant currency and maintaining a healthy EBIT margin of 25.1%. HCL Software addresses business opportunities across 4 key markets, which are digital transformation, data analytics, and insights. Competition. In the expansive arena of IT and consulting services, Hcl Technologies encounters robust competition from several prominent players, including but not limited to Capgemini, Accenture, Infosys, Cognizant, IBM, TCS, Deloitte, and SAP. So, how does HCL stand out? HCL's higher exposure to cloud, which comprises a larger share of non-discretionary spends, offers a better resilience to its portfolio with higher demand for cloud, network, security and digital workplace services. HCL has limited exposure to troubled BFSI clients, and recent large deal ramps up in the BFSI vertical led to strong segmental growth of 6.9% sequentially in constant currency, contrary to weak growth at both TCS and Infosys lately. In conclusion, while HCL has not been immune to earnings downgrades, the company is seen as better placed than its competitors due to its limited exposure to troubled clients, higher exposure to cloud, and strategic deal wins. Now let's examine the strategic objectives set by HCL and how it plans on implementing them. Leadership through differentiated services and products. Employer of choice in professional services across all its key geographies. Preferred digital partner for global 2000 enterprises in chosen markets. With ESG, environmental, social and governance goals into business strategy. The company has been an early adopter on new technologies. Even amongst its peer group, it has also enabled and inculcated the entrepreneurial spirit amongst its various employees. HCL today is growing faster than its peer group and is also gaining in profitability. Let us take a quick look at its financials. Let us proceed by taking a look at HCL Tech's financials and how it has performed. The revenue from operations of HCL Technologies stood at Rs 10,99,130 million in FY24, which was up 8.3% compared to rupees 10,14,560 million reported in FY23. Hcl Technologies revenue has grown from rupees 7,06,760 million in FY20 to rupees 10,99,130 million in FY24. Over the past 5 years, the revenue of Hcl Technologies has grown at a CAGR of 13.8%. The net profit stood at rupees 1,57,100 million in FY24, which was up 5.8% compared to rupees 1,48,450 million reported in FY23. The IT services company's revenue from operations in the second quarter of the current fiscal stood at 26,672 crore rupees, registering a growth of 8.04% compared to 24,686 crore rupees in the year ago period. With regards to segment-wise performance, Hcl Tech's IT and business service revenue stood at 19,898 crore rupees in Q2 FY24, up by 4.6% year-on-year, while engineering and R&D services revenue saw a single-digit growth of 2% YOY to 4,271 crore rupees, and Hcl software revenue climbed by 3.6% YOY. The EBIT margin of IT and business services stood at 18.1%, and that of engineering and R&D services came in at 19.2% in Q2 FY24. Challenges faced by the IT industry and HCL. The Indian IT industry is facing a challenging landscape this year due to weak global cues and a decrease in discretionary spending by clients. Leading IT companies, including Hcl Technologies, TCS, and Infosys, reported a notable decline in their employee numbers during the opening week of the Q2 earnings season. The Q2 performance of these tech giants fell short of expectations due to global economic factors such as high inflation, increased interest rates, reduced investments, and geopolitical uncertainties, which have exacerbated concerns in the industry. Clients are delaying non-critical initiatives and are prioritizing optimization efforts. This trend is likely to continue for the foreseeable future. In an interview with CNBC TV 18, C. Vijay Kumar, Chief Executive Officer and Managing Director of Hcl Technologies, has said the firm's three verticals, including financial services, manufacturing, and life sciences, which contribute 60% to the company's services revenue, have done extremely well amid macroeconomic challenges. The CEO addressed challenges faced by the company in the tech and telecom verticals, emphasizing that the encountered difficulties stemmed from ramp downs during the quarter that exceeded initial expectations. This unanticipated outcome has led to a notable decline in performance within these verticals. C. Vijay Kumar stated that the most significant challenge for Hcl Tech was the impact of COVID-19. He emphasized that the company delivers mission-critical services to clients, including hospitals and utility providers, supporting frontline teams in devising solutions. However, the pandemic disrupted these operations. Pandemic and post-pandemic scenario. When COVID-19 came knocking, industry leaders all over the world found themselves both shocked and, in many cases, slightly puzzled. The same was true for Hcl Technologies. The company saw top-line decline in the June quarter of 2020. While there was an obvious strain, their supply chain was already relatively resilient to the effects of the pandemic. The company successfully procured nearly 100,000 laptops and relevant equipment for their own staff as well as their customers. The company has a multi-vendor, multi-channel, multi-solution approach to solving a lot of these problems. Hcl had, even prior to COVID-19, a diverse portfolio of suppliers and partners which allowed them to quickly respond to supply and demand issues. Hcl Technologies had invoked a business continuity plan, ensuring delivery to clients and employee commitments, and risk management framework to minimize impact of the virus outbreak on employees and clients. The IT company said 76% of its Indian employees and 92% of its staff abroad were enabled to work from home, and that it has not witnessed any major disruptions in operations. The disruptive forces created by the coronavirus pandemic heightened the urgency to leverage next-generation technology. Pressure to adapt to the global pandemic quickly accelerated digital transformation journeys, creating innumerable opportunities. Chief Technology Officer Kalyan Kumar said that post-pandemic demand for data has jumped significantly high, and telecom operators are gradually moving towards cloud computing systems to manage capacity in the network. To support employees, During the pandemic, the company made a policy exception and paid 100% EPB irrespective of performance. Post-pandemic, the company is reverting to the original policy. Laying down a new growth plan, Hcl Technologies plans to leverage its partnerships with hyperscalers and follow a diversified product as well as service strategy to tap a larger market, Chairperson Roshni Nadar Malhotra said. Future outlook. Hcl Technologies endeavors to sustain its momentum by leveraging global sales networks to foster connections with local government and educational institutions, aiming to skill talent with scale and predictability. The company also places a high priority on onboarding new G2000 customers, aspiring to become their preferred partner for talent acquisitions and learning. With accelerated growth in their existing clients and partnerships with hyperscalers, their 2x market CAGR growth across cloud services is being fueled. Investments have been made in a new frontier geographies, and there is an anticipation of accelerated growth across these areas. As we wrap up our exploration into the dynamics of Hcl Technologies, we have uncovered key insights into their success factors, strategic approaches, and future plans. If you found this discussion enriching, consider giving it a thumbs up and sharing it within your professional network. Subscribe for more content on business research, industry insights, and the latest trends.